When our next guest was on in December, he called for a mini rally in the markets, then new lows in 2009. Well, here we are. That's what happened. Where do we go from here? Let's bring in Tyler Vernon, principal at Biltmore Capital Advisors, with his take on the stock market. Well, not just stocks, but also bonds. So where do we go from here? Because we got a nice little rally.
I think it's great. I love to hear Bernanke talk a little bit this morning. And in our view...
Did I hear that right?
Yeah, it's great. And actually, what the markets show, it's, not a turnaround yet from Obama. But, at this point, we have much different views in the short term than the long term. Short term, we've been waiting for some kind of good news. Last week, bears outnumbered bulls about 5-1. There were some of the lowest readings of pessimism that were out there. And finally, the brokers that we were talking to are saying that their clients are calling them just saying, get me out of this thing. So from a contrarian standpoint, we loved this news. And I think we've just been looking for some sort of news that people can grasp onto to give us probably a 10 to 15% rally over the next couple months. So I think it'll be a great opportunity for people to get a little bit more conservative.
But that is more of a psychological indicator. What about fundamentals here?
Well, again, I think this is a technical rally, psychologically based, technically based. I think more longer term, fundamentals are going to drive this market, and unfortunately, we see fundamentals in a tailspin. We've talked about this continuing theme of the consumer. They're seeing their 401ks plummet, their homes plummet in price, and they're tightening their belt when it comes to spending. And as we know, it's leading to lower profits, which is leading to higher unemployment, which is leading to lower spending. And we're just in this revolving cycle downwards, and it's just getting worse and worse. And we don't see a short-term way to get out of this.
But where do you put your money then? Because again, we've talked about this before, Tyler, where you have these mini rallies. But again, for people who aren't great traders, where do they put their money and what do they do with it?
Sure. Well, again, I think, people that do have advisors out there, and to be able to say, hey, let me know, or let's put in some triggers here so when we get another 15%, let's take some off the table. But, again, I don't think the stock market right now is the place to be. I mean, for people that do trade short term, I think we're going to get some upside. But I really think non-market-based investments, again, we've talked about this corporate bond story. Corporates are up, I believe, about 15%. High-grade corporates from one of the last time I was on the show. Spreads are still trading at record highs over treasuries. Now, they're not right for everybody. But
where is the valuation on corporate debt versus the actual equities here? Are we also at record value, the most attractive valuations that we've seen in a long time?
That's a great question. I think psychology and where the market is going is different than the fundamental prices of these things. If we look at past times of panic and past markets, as far as just horrible bear markets, that in times of panic, PEs have gone down to a 9 and 10. 1940, they were down to, I believe, a 10. 1950, they were at a 9 to 10. 77 to 80, PEs were about an 8 to 9. As of last week, we're at a 13. So I agree with you. I mean, Buffett, people would say he was a value investor. He, I believe, put everything in stock when the Dow was at 9,000. So we think these prices are a great buy. But I think, psychology has a lot to do with this. And I think there's going to be a lot coming down the pipe that's going to push this market down lower.
Well, a lot coming out of the government, certainly, in terms of borrowing that could basically push prices down on treasuries. But are you willing here to short them and bet that those prices will fall? Because, again, if it's psychology, then that could be a very dangerous bet.
Yeah, well, I like the gold/short treasury hedge. So if the world falls apart, people flock to gold. I know you don't like gold. And
it's like dirt.
Yeah.
Go ahead.
Well, again, I think when everything falls apart, people they see that hard asset and they'll put money in it. So I don't think it's good all the time, but I think we'd be a buyer when it went into the 800s. Short the treasury, we think there's some ways to do that. It's not right for everybody, but we think there's some real value over the long term. We think inflation will kick up, and I believe TBT. There's some other easy ways for people to do it, and I think we'll see a real fall in that treasury.
Come back. We'll hold you to it, whether you're right.
All right.
In a couple of months. Tyler, it's great to see you.
Look forward to it.
Thank you. Tyler Vernon, principal with Biltmore Capital Advisors. Bernie Madoff.